Good morning, everyone. Welcome back to our Monday morning trading session. Hold on one second here. I'm going to get you my monitor. We just had the markets open, and they're on a little bit of a tear today, at least the NASDAQ. Okay, so you should be able to see my monitor. You'll notice here, let's take a look at the Raptor, or pardon me, the Falcon, that on Friday's session, the market ended rather strong. Here we had the European Open, the London Open, and they've been pressing higher. And now we just had the opening bell. So this here, through here, is going to look like a little bit of an opening gap to the traders this morning, the North American traders. We'll see whether they choose to trade into that gap or whether they're just going to keep pressing higher. Oh dear. So far they're still pushing. It looks like this trend line touch signal that we had here that triggered right on the open just hit our profit target. So that would have been something like that. We'll give them a few minutes here. Oh, they're definitely on a tear to the upside. Pre-market here on the Hawk, we had a nice little macro pullback signal. That too had some very good follow through to it. I might set up for a runner today on the Hawk. Not much out of crude oil. They're still, well, more or less sideways. We did get a green bar sell here. The market tailed off on Friday. Currently, the lows are around the 43.50 area. But here too, we're waiting for a fresh signal that we can take advantage of. All the activity seems to be coming at the market open and close. Let's take a look at soybeans. They are working on a trend change signal here on our Falcon. Or I suppose the trend change signal occurred right here. We're working on a possible trend line touch. So the trend change occurred here where the trend line went from red to green. We had our up, down, up pattern, our signal, and a little bit of a follow through there. As you can see, a little bit of a gap from where Friday's session left off. We'll see whether or not they try to get inside that gap also. Okay, well, let's see what we got going on here. Is it going to be time to jump in? Oh, you stinkers. Okay. It took a little bit too long to get on board this signal here. I was going to dial down my risk amount a little bit. Maybe set it up something like that. Tony's asking, this last weekend I had 2 weddings to attend. One on Pender Island and the other not too far here from where I live in the little neighboring community of Mill Bay. Tony's asking, was I able to make the ferry? Well, everything worked out okay. A lot of ferry traffic this time of year. A lot of tourists. Okay. I wonder if the buyers have worn themselves out here. You can see after that initial rally out of the gate, we're starting to work on some signs of weakness here. We've hit the soft edge on our eagle. We're working into a macro pullback signal here on the hawk, and even our falcon is starting to show some signs of weakness. We need to be careful here getting too aggressive on the sell side because we're obviously still in an uptrend and we haven't seen a test of the extreme yet. Just curious how those trend lines may be falling. Oh, John's having some audio problems. Let's see if we can. Okay, all good. Okay, Kai's asking an interesting question here about the eagle. He's asking, so long as the eagle is in bullish mode, you don't want to sell? No, that's not necessarily it. I do try to look at the tools overall, but each tool is also programmed for its specific environment. So it's not like, we're looking at a 5-minute chart to scalp and a 30-minute chart to swing trade and an hourly chart to trend trade. That's not what it is. I will short a hawk signal here if I get it, or if I get a trend change signal here on the Falcon, I will sell it, even though the eagle is still bullish. In fact, I would look at my eagle and I would say, well, the hard edge here around 45.45 is probably going to be a probable target. Now, Stephanie always used to only trade in sync with the eagle. That was how she was most comfortable. But before we get a reversal, we need to see a test of the extreme, right? And a failure. So here's the extreme price right here. This is the current high. The market has come down. We're heading up here now. If this signal fails, we will have had our test of the extreme, and it will be likely that prices will try to head lower for the short term. How much lower? Well, that's anybody's guess, right? But 45.45, the hard edge of the eagle band, right here, that seems like a probable target. And you can see prices are starting to turn over a little bit now. It's still, a little premature. Well, the advanced decline is very positive. Jim says we have almost 2150 buyers and 500 sellers. So that's what, about 1600 to the positive. So that's a very strong advanced decline, at least as far as the advanced decline numbers go. No, John. John saying you mean 45.55? No, I mean the hard edge of the band right here, 45.45. When the market retreats, you'll notice that it almost always goes to the hard edge of the eagle band. Right, and let's just find a better section here. Now here was a very strong move lower, and you see it took a long time before the market made a pullback, but even these minor pullbacks, this is where it was going. It was trying to go into the hard edge. So that's what I'm thinking here. If this signal fails now, and I'm not sure that it will, if it turns over here, I'm going to actually have a buy signal on the eagle, and I'll have to think about perhaps buying it. But for me at the moment, the easier trade, see, now they're going to make me buy it. For me, the easier trade is to sell it. Oh, shoot, and I can't cover it that deep. No, there they go. Because the sell would have more structure to it. Now, as you can see, it didn't work out that way, at least not yet. And unfortunately, when I was setting up my eagle trade here, this is what I was looking at. I had my signal here, but we were still against the ATR line. So the next bar turned the ATR over. I know it's difficult to see, but it flipped the ATR. So this now became my signal bar. And I was hoping that I could cover it back here to the hard edge, but it was a little bit out of reach. So if the market didn't run away on me so quickly, I would have, found something halfway here through the band. But it is still a little bit early, so we'll see. Okay, Josh is asking, do I consider the thickness of the soft edge? Okay, I'm not entirely sure what you mean by that. The soft edge of the band is this portion here. The hard edge is this highlighted portion. That's what we refer to it as. Now, very often you will see a soft edge bounce also. The hard edge bounce, I feel a little better about taking. The hard edge bounce tends to have a little bit more follow through to it. Like here was a green bar sell occurred off the hard edge. You can see we had some decent follow through off of that. But when the market is moving, like really moving, sometimes you don't get those hard edge bounces. Sometimes you're only going to see the soft edge bounce. But with the soft edge bounce, let's say we were looking at this signal down here, with the soft edge bounce, once again, I would anticipate it may turn into a hard edge bounce, so I'm going to try to cover it back to the hard edge, just in case. In this case, it was a non-issue. The market just kept going. Okay, we are definitely slowing down a little bit now. We've produced a couple macro pullback signals back to back here. Macro pullback signals tend to only occur 2, maybe 3 times within a trend on the hawk. So we'll see whether this fails now, heads a little bit deeper, perhaps gives us a red bar buy. Then we can be fairly confident that the market momentum is starting to shift. But you can see all the hawk signals here had good follow through. The macro pullbacks. Here was another macro pullback. I suppose you could also view this as a 4-arrow consolidation, this little bit through here. I would have felt better taking this macro pullback here. In fact, I almost considered putting that one on. Then this macro pullback here. And the reason is that this macro pullback, the first one, has more room to test the high. I have enough room in here that I can set up a trade, something like this, scalp out my profit, and if the market fails here and heads lower, well, I still have my profit. I don't need to worry. Whereas this one that's working right now, I have less room. Right? If I set it up like this, I'm having to really, really test these highs. It's not to say the market won't, but it's much easier getting like a 50% retracement out of a move than nearly 100% retracement. Oh, yes. Hi, Sean. Sean mentions that the big weekend edition that I put out with the supportandresistance.com site was a little bit late due to a medical emergency. Fortunately, that was not on my end. That was the webmaster inserted that because she had a family issue she had to deal with. She's the one who is responsible for making sure that you get your information on time. Yeah, John says, off with her head. Okay, Josh is asking here about the soft edge again. Josh is asking, the thicker of the soft edge equals stronger buy on top, vice versa. Okay, well, if I understand your question correctly, the closer you are to the hard edge, that's this portion right here, the stronger the signal. Yes, that is correct. Now you can see here on the soft edge side of the band, we still had some good follow through on these signals. However, it is not uncommon to see a signal produce on the soft edge of the trading band and then have it retreat here to the hard edge of the trading band before reversing and heading higher. So if you choose to take this signal here off the soft edge of the trading band, I would recommend you protect yourself to the hard edge of the band in case the market retreats a little bit. You see, here's an example down here. Here was a sell on the soft edge of the band. And we're going to say for the moment that we're taking the signal here regardless of the ATR line. Normally we would wait for the ATR to turn over, but let's say we take the signal right here. I would not cover this trade right there because it's trading on the soft edge of the band. I know there's a chance that the signal may drift back here to the hard edge. So I'm going to cover at the hard edge or above the hard edge. Did they engage us? No. Okay, so the signal didn't actually engage us, but let's pretend for a moment that it did engage us. Look at what's happening. The market is retreating into the hard edge. Right, so that's what you want to protect yourself against. Sometimes, like I say, these soft edge signals, the ones that develop on the soft edge of the trading band, will end up retreating a little bit before they head lower. So you don't want to get yourself stopped out just before the market decides to move in your direction. All right, so it appears that they might be running on fumes now. So our macro pullbacks had good follow through. Each one found its profit objective, but look at, we're dipping lower. Now we're into some yellow bars, yet another macro pullback. These are signs of weakness. Okay, Kai's asking, what's my favorite eagle signal look like? Well, let's go back here a few days because it's been a little choppy through here. And let me see if I can find you. All right, well, here's one that we actually were able to take advantage of the other day. Okay, first things first, you asked for my favorite. My favorite is the red bar buy or the green bar sell. These always occur within a trend. Here we go. So they occur within a trend, and what happens, it ends up looking like this. So in this case, we're in an uptrend. That's fairly obvious. The market comes back, gets to the hard edge or very close to the hard edge, or sometimes even overshoots the hard edge of the trading band. And then it will come back, in this case, because it's an uptrend, with red bars and a buy signal. This is a very high probability signal on the eagle. And when you think about it, what's going on here, it actually makes a little bit of sense. You've got a market which is in a pretty strong uptrend, And now all of a sudden, look at all these solid bars. These solid bars are like a regular candlestick that opens high and closes low. And these hollow bars are like a regular candlestick that opens low and closes high. So these hollow ones are very bullish. These solid ones are bearish. So what's happening is the market is put in a strong rally. Now we're getting the sellers starting to force the market down, Market condition is still bullish because the bar color is still green, and all of a sudden it's red. And it's almost as though when this occurs, it's like, excuse me, all of a sudden the buyers wake up and say, oh, wait a minute, what's going on here? And then they come back and they produce a buy signal. So you see the sellers force the market down. All of a sudden the buyers wake up. Even though the bars are red, suggesting that the market tone is starting to shift a little bit, we're producing a buy signal. And this is a very high probability signal, usually enough to at least get to your high probability profit target. The inverse of that is the green bar sell. And we need to find a market that's been in a downtrend so I can show you. All right, this is not textbook, but pretty close. Okay, so the market's in a downtrend. It retreats to the hard edge. It produces a green bar with a sell signal. See, we've got the red warning dot, red triangle, red hash mark, green bar with a sell signal. And once again, we would expect the market to resume its trend off of that signal. All right, so those, as far as the eagle goes, those are two of your strongest signals. This, well, here's a green bar sell. So we have a downtrend, green bar sell. We would anticipate the market to tail off from there, right? So that's a probable looking setup. Now, here the other day we had a, where did you go? A rule of three. Oh yes, it was back here, I remember. Okay, now a rule of three occurs when you get three signals produced against the hard or against the trading band. So remember, the trading band gives us our trading bias. When this market opened, we had a bullish band and we had produced two signals, two sell signals against the band, right? So the band went bullish here. So here's signal 1 against the band. Here's signal 2 against the band. Now, a rule of three says that normally we produce three signals against the band, and that third signal we can either sell or we can use it as an early warning that the market might be changing direction. In this case, we actually sold this one here. So even though we only had two signals, it's still a rule of three type trade. You can call it a rule of two. Sometimes it turns out to be a rule of four, but a rule of three tends to be the norm. But I'll show you the clincher. Here was the giveaway. We had a test to the extreme, right? You cannot have a rule of three signal without a test of the extreme. Muy importante. Right? We need to see that failure and then the market producing, in this case, sell signals. That tells us it's okay to sell. So you could have entered here, you could have entered below that low even, maybe set up the trade like that, but you can see the follow through was enormous. The rule of three signal, I just pointed out there, it's a good signal. I don't want you getting carried away with it. I would probably, red bar buy, green bar sell would be, as far as probabilities go, probably the number one signal. The number two signal would be your first signal with a new trend. So we have a new trend here because our band has turned over, and we're about to produce our first signal. Where are you? Okay, so there's our first signal with a new trend. This would be the second highest probability signal. So again, I'm just going to show you here off the hash mark. We could wait for the ATR to turn over, but look at where I'm looking to place my stop. I'm always looking somewhere around the hard edge, even if my stop strategy is down here. I would still want to cover back there. So I either dial my stop strategy back a little bit, or I turn it off for the moment. But whatever I choose to do, there is always that possibility that the market could retreat to the hard edge. In this case, it was a non-issue, and the market made a fairly steady progression lower. So as far as probabilities go, red bar buy, green bar sell, number one. First signal with a trend change, probably number two. Rule of three signals, probably your third highest probability signal as far as the eagle goes. All right, so now we're getting this type of situation again. Yeah, good comment here from John regarding the Facebook rooms that Adam has started. If you're not currently a member there, please do consider joining, because John's right, there's some very good discussions going on, especially in the Raptor room, which is great to see. Okay, we can see here our hawk is starting to turn over. We actually produced the first micro macro cross lower. And I knew somebody was going to ask this. Kai said, well, how high does the retest have to be in order to be considered a test of the extreme? Short answer, if it looks like a test of the extreme, it's a test of the extreme. Now, I know that doesn't help you very much, so let me see if I can clarify. Here we're getting a first micro macro cross. Here's our extreme price. This is our high. Does it look anywhere through here we have had a test of the extreme yet? Probably not. Fib traders are going to be all over this, and they're going to be shooting their fib lines saying, oh, well, the market needs to get up here to the 50% level or the 62, and then if it fails, then it's okay to sell it, and so on and so forth. No. What you are looking for is a serious effort on the part of the buyers to recover the trend. Why do I say that? Well, look at what's been going on here. The buyers have had the market for the last 2 days, or the better part of the last 2 days. Do you think for a moment that the buyers are going to walk away from a trend like that just because the sellers were able to push them down to 45.60? Probably not. Therefore, even though we have a signal here, this is actually a 4-arrow consolidation. I'm not going to take it right on the hash mark. I would take it below the low, and I would try to cover it above this high. Here, let's actually submit this. Because if I get brought in here, there's still an opportunity or a possibility that the market is going to try to retest the extreme or to recover the trend. Look at it that way. There's a chance that the market's going to try to recover this trend because the buyers have been so strong. Now, how high are the buyers going to be able to get before the sellers try to squash them? That's anybody's guess. They may get this high, they may get this high. but the fact remains I need to see the buyers produce a serious effort. Now, more often than not, it's going to end up looking something like this, where you're going to get about half to 2/3 of a retracement. And then the sellers, if the sellers are serious, are going to turn the market again and start sending the buyers home. And you can see this, a simple exercise for you to do is just go back to where the trends have turned. Oh, here, I'm going to have to close this so I get some perspective. Okay, so here the market changed from a downtrend to an uptrend. Do you see the test of the extreme? This was our extreme price. Where was the test of the extreme? If you said this section right through here, you would be correct. This is the retest. This is the sellers trying to recover the market. And look at what happened. The buyers stepped in and started pushing the market higher. So now we get a first micro-macro cross signal. All right. We can take this first micro-macro cross now with a little bit of confidence because we have seen the test of the extreme and maybe the shift in momentum. Tony, good question. Tony's asking for the link for the Raptor room. You should have received an invitation. If you did not, I'll get you to email Adam and he will set you up. So anybody who's interested in that, you can email Adam. Okay, so Kai is asking, so the retest doesn't necessarily need to be closer to the low. Well, if you take a look at this, here's the low. That's a pretty good retest, right? That's, well, if we play with the Fibonacci tool, and I'm not suggesting you use fib levels, I don't. But it looks like we retraced to about, 20% of this trend here. Oh, and let me shoot the fib line the other way. Yeah, we still made a major retracement this way, still down past the 23% level. So this is a major retracement. The point though is that, the sellers had control of the market. The buyers pushed the market up. The sellers tried to take the market back, and the buyers said, "Oh no, you don't." And the sellers said, "Oh yes, we do." And the buyer said, "Oh no, you don't." And then they really pressed and pushed higher. So high, in fact, that they took out this swing high right here. And that's significant too, because when we see a breach of a significant swing point, we can normally expect at least 2 pushes in the direction of the breakout, with the first and second normally being the strongest. So the fact that we started to make a new high here suggests that we're going to make another attempt at a new high. Now this happens, in all time frames, on all charts. That's why it's so powerful. You don't just need to be looking at a hawk chart. You can see the same thing developing on your falcon or your raptor or your eagle. I'm just curious, did our first micro-macro cross have enough in it to find the high probability target? Yes, it did, just enough, and then the market starts to flounder, and here we are, we're coming back, we're going to test the extreme, and then if they fail, we're almost guaranteed that the market will head lower. Yeah, so Kai's asking about this first micro-macro cross. He says, so we can't necessarily trust the first micro-macro cross in this case? Well, you can. The first micro-macro cross is always a high probability signal. That's not to say it can never fail. But here's the first micro-macro cross, and unfortunately I saw this one too late, but we're going to pretend it's happening real time. Here's the first micro-macro cross. So now the question is, well, where do I want to cover this trade? I haven't seen a test of the extreme yet, so it makes sense that I should try to cover it above the high. If I tried to cover the trade, say, above the macro line, which is always a good secondary place to place your stop, you can see the signal still worked out. I still hit my high probability target before the market started to reverse, but let's pretend for a moment that it did not reach our profit objective. Now all of a sudden I'm taking some heat on the trade, right? And I'm sweating a bit, and it's like, do I have enough to ride out this swing or not? Did I leave my stop back far enough? So you don't want to get yourself into that type of situation. I would still consider taking the first micro-macro cross just because I know it's such a high probability trade. But placing your stop would require a little bit of thought. Here's crude oil. Crude oil has just made a very serious test of the extreme. Now, I know some of you are going to be looking at this and you're going to be saying, Eric, isn't that test of the extreme actually lower than the other price? Yes, it is. You can see it fudged it by, what, a couple of cents? However, if crude oil rallies now and takes out this high, this would have been your test of the extreme. This would have been your retest of the low. And once again, just remember what this is showing you. Don't get so caught up in the price pattern itself that you forget what it's telling you. This is telling you the sellers are trying to recover the trend, right? But what happened? The buyers dug in around 43.50 and are trying to rally the market higher. Okay, so now we're waiting to see what the sellers will do. If the sellers step in now, and as we get closer to this 44.30 area, the sellers are bound to get more aggressive. We'll see whether or not they can turn the buyers around. Otherwise, if the buyers are stronger than the sellers, they're going to threaten 44.30, and they're going to go up here and they're going to break 44.30. And they're probably going to go up for a couple bars, and then the sellers are really going to start to pile it on. And then the buyers are going to come back. And then we're going to have a buying opportunity. How do I know this? Because it happens over and over and over again. That's why when, we're looking at things like breakouts, I tell you, you don't need to worry about the market necessarily bolting on a breakout, because if we have a breakout above a high, so here's our swing high, market comes down, retests the extreme, fails, breaks through, what do I always tell you? Look for the retest. There's the retest. Out of the retest, we're going to get a buying opportunity if the retest holds. If the retest fails and the market drifts well back into this range, well then the buyers don't truly have control of the market, do they? And this whole thing may continue to go over and over again until one side or the other finally breaks outside of this range. And once again, let's say the sellers break it out to the downside. You're going to see a retest and another opportunity to sell. This happens 99 times out of 100. Occasionally, and this is the part that gives everybody fits, is that the market will just break out and not look back. Or to look back for one bar or a half a bar, and you won't get a second chance. It happens. It's rare, but it happens. Most of the time, you're going to see some sort of structure to tell you that there's actually a shift in control. And honestly, the way crude oil is struggling here, well, that was a pretty steady day lower, and actually Friday wasn't too bad. But Monday, we're seeing some struggle here, aren't we? So this is either going to end up moving sideways now in this 43.50 to 44.30 range, or the buyers are going to press 44.30, maybe break out a little bit, retest, and then give us a buying opportunity. Unfortunately, these things don't happen instantaneously, so that means we end up having to sit around for a little while for an opportunity. Okay, let's take a look at our Raptor now. So, does this look like a test of the extreme to anyone? Yes, no, maybe? It could be, right? It's kind of right in the middle there. How will we know for sure if this is a test of the extreme? Well, if we break this low. So let's say the Raptor produces a sell signal here. Am I going to take it right on the hash mark? Well, I could, but maybe I would be better off selling below the low. We don't have a signal yet, but that's how it would be setting up. Okay, so Kai's asking if I took the signal on the low of the previous bar. So I think what Kai is asking is if I didn't take it on the hash mark, if I took it below the low of that bar instead, I wouldn't have hit my profit target. And oh, it just kissed it there. But you're probably right. We probably would not have gotten out. So now we're in a position where we're sweating the trade, looking for that retest, for that test of the extreme. And honestly, at this point right here, when the market started to trickle a little bit lower, I would now take my stop from up here and I would roll it above here. So instead of having $400 at risk, I'd have about 200. And if the market continued lower on this bar here, then I would roll my stop above there, because once again, we're watching the shift in momentum. Right now, the sellers have control of the market. How can I say that? Well, the buyers made minimal effort to push the market up here, and the sellers started pressing. Okay, so we're pressing a little bit more. My objective at this point is to try to get to break even, because I know there's buyers down here. Right, so if I can get out with a minimal loss, or maybe even get this to a break-even situation, that would be all right. I would be okay with that. Because the people who sold here are what they call the weak sellers. The people that are selling up here or have sold over here, these are the strong sellers, right? These guys are never in a losing position. These guys saw profit as soon as they took their trade. The market started ticking lower, they're in a profitable position. Okay, it retreats a little bit against them. Okay, not so bad, not as much profit, but they're still profitable, right? I'm talking about the guys that sold right here. These are the strong sellers. These are the weak sellers. So if you happen to sell down here, what are you looking for? You're just looking to get out of your trade. Right? You're just looking to maybe take a small profit, maybe get out at break even, maybe get out with a small loss. So these are the weak sellers. These are the strong sellers. So if the market gets back up here, then the strong sellers are going to try to sell again. And the weak buyers, the other side of the equation, are going to buy in here. And then all of a sudden they're going to start to panic as the market moves against them. And that's how a channel develops. So that's kind of where we're at right now. Yeah, weak seller equals a trapped seller? Yes, definitely. That's what Josh is asking. So Josh is saying, so those guys that sold right there, these are the weak sellers. Yes, definitely. So if my stop is right here as a weak seller, and let's say I'm not alone, there's probably a few hundred of us here. If the market trades above here, there's all these buy orders sitting here, right? These are all our stop loss orders. There's probably, I'm not watching the dome, but I bet you there's probably 150 orders up here. Maybe not that many, but certainly in the neighborhood of 100. If somebody has the dome up and they can see that deep into the dome, I bet you it's around the 4568 area. There's probably 100, 150 orders parked. So what do you think would happen if the buyers push the market now and take out this 4568 area? You got it. They're going to light up the sellers. The sellers are going to be forced to exit. They're trapped out of their trade, and you're going to see the NQ move higher still. Yeah. John and Jim went to the same trading school. They both said the market's going to puke it up. Yep, that's exactly what it's going to do. Yeah, like John says, he says, a long time ago, I told you guys that you won't be a successful trader until you learn to trade the pullbacks, and that's very true. You have to watch for these opportunities. That's why a macro pullback is such a powerful signal also. Okay, so let's see what happens now as they get closer to this 4568 area. So we essentially have the buyers and sellers drawing up the battle lines. Oops. And now we're potentially working on a buy signal. Our macro line not in sync yet. This is not a first micro macro cross to the upside. Not technically anyway. Just curious how the other tools are shaping up. Yeah, nothing definitive there yet either. Okay, so we'll continue to watch the hawk. So we had that initial run up and then everybody went home or took some profit. Likewise, all these traders who say bought here out of the open, where was it? Right about here. Excuse me. Where do you think their stop loss orders would be? If you had bought there, where do you think your stop loss order is? I would probably say somewhere in this vicinity. So once again, if the market trades now below 45.60, these stop loss orders are going to start to get tagged, which will add some downward momentum. We did get a green bar sell signal up here, by the way. We could have been among the strong sellers selling near the highs. Well, near the high is up here, but you get my point, I think. See if we have a signal on one of the other tools yet. Yeah, you see the Raptor's ahead of the curve here. The Raptor's giving us a sell signal. We've had our test of the extreme, the failure. We could set up to short it, say below the lows. Enable put our stop above the top end of the trading range. Yeah, let's get back to the action here on the hawk. Now we're getting a red bar buy signal. So these would be the strong buyers, the buyers that are very, well, actually, sorry, it's not a red bar buy signal because our macro line is gray. So this signal is not really a true signal. With the red bar buy, we still need to see the macro line to be green, like this one here. This would have been a red bar buy. So if you had taken that red bar buy looking for a retest of the extreme, it once again becomes a matter of logistics. Where are you going to place your stop? Can you afford your stop way down there? Well, you could. So now you're in this trade and you're sweating the trade a little bit. You're looking for an opportunity to start rolling your stops. So as I got up here, I would probably start rolling my stop, maybe into here, and then I would have ended up getting stopped out. But let's say I didn't. So I would definitely have my stop below the bottom end of this trading range. So once again, a little bit more fuel for the fire if the market tries to break outside of this range. So who has control of the market right now? And Kai is asking, what's the stronger signal, the red bar buy, green bar sell, or the first micro macro cross? Without exception, the first micro macro cross signal is your strongest signal. And if you haven't received the Hawk cheat sheet yet, please feel free to write me and I will send this to you. This is what we call the cheat sheet, and what it does is it highlights the important signals for you. So you'll see the red bar buy or the green bar sell, which is the inverse in a downtrend. They occur near the end of the trend. And very often you can use them just as an early warning that the trend might be changing. You don't even need to trade them. All right, back to the action here. As we break the 45.60 area, notice the market's starting to get a little bit more active now. You can just see how the bars are forming a little bit faster. Now the next serious level is going to be this one right down there. And somewhere through here, we're going to see the buyers start to dig in a little bit, and we're going to get our retest, and then our failure, and probably a first micro macro cross on the hawk. We've already had the signal on the Raptor, so we're in a trade there. And we got an early trend change signal here on the Falcon, which occurred right here. And once again, you could have taken that one, the early trend change signal, based on the fact that you had the test of the extreme and that the market was attempting to head lower. So you could have taken this signal right there, covered it right there, and you'd be in your profitable position already. You just hit your high probability profit target. And we're into the hard edge now on our eagle, so we normally anticipate some sort of reaction there. The Raptor about to, we just hit our break-even trigger, just hovering above our first profit objective. Come on, get down there. Come on. Come on, you can do it. Yeah, John says a 1030 reversal maybe. Yeah, it could be. It could be. Could be a little bit of profit taking going on from this early run up. You know, on a larger time frame, this may turn out to be a what do they call it? A bear trap, where they let the buyers load up and then they start sending the market lower. This little green line here highlights the low of the morning of the first hour, so I wouldn't be surprised to see it retrace here. Remember, we've got a big gap down here around this 45-40 area even, and who knows, we might even hit this longer term trend line that I drew down here, but that's a long ways away still. Our Geiger counter is still looking pretty bearish, so hopefully this little pullback won't give us too much heat. All right, while I was chatting there, I noticed, I just looked over at my crude oil chart. I don't know if anybody else was following crude this morning, but look at what happened, right? Here was our low, our test of the extreme. The market broke the 44.30 area. And look at that. And even though the eagle produced the signal down here, we did get a chance to buy off of the Falcon and the Hawk. But knowing that we were testing the extreme and possibly seeing a failure made us more open to a rally. And that would have been a very nice rally to take advantage of. Okay, Kai's asking about the signal that we have building on the Falcon right now. Well, I suppose it's a proper trend change signal. It hasn't printed just yet. We're getting some green dots here. We need it to see come up a little bit, and then we need to see the sellers retake the market. And then that would offer us a selling opportunity. You know, the thing with trading is that the best opportunities always come when the market looks least probable. When you're looking at your chart and you can't believe that the market can actually go higher or lower. You know, like here was the NQ out of the open. You're looking at this and it's like, well, give me some structure here, please. You know, the market's been in a tear since the London Open. It can't possibly go higher, can it? So you think, well, okay, maybe I won't take the signal, or maybe I'll just put a onesie on it, and look at what happens. The market goes much higher. By the time it looks as though the signal may have some strength to it, that's when things start to fall apart. Here, it doesn't look like the market can head lower, right? The market now everybody's looking at it and saying, oh yeah, support's holding, let's buy in, and the trend's going to resume. And yet what happens? The market starts to head lower. Now, it's not to say that if a signal develops here, that a sell signal develops, that I won't take it. It will be a trend change signal. I know it will be a high probability signal. But I guess the point I'm trying to make is that often when things look most promising on the chart, or most obvious on the chart, is when it's going to go the other way. I remember early on in my trading career, and I'm sure some of you will have experienced a similar frustration, is that when the signal looks right, you get in and the market goes against you, right? It almost got to a point where I considered fading my own signals. In other words, if it looked like a buy signal, I would sell. And if it looked like a sell signal, I would buy. Oh, here we go. Here's that Falcon signal. So here's the signal where I would probably maybe dial down the risk amount a little bit, just because it's not that the trend is getting long in the tooth, but I'm starting to wonder, are we going to see a larger retracement here? So, okay, $175, that's fairly palatable. I could throw that in there. See if we can't take it down here. Oops. All right, we're going to have to pretend. But that's a little something to keep in the back of your mind. You're not the only one who sees these things, right? There's a lot of traders out there. It's always, even though sometimes it's a little bit more uncomfortable, it's always nice being the first one in than the last one in. Some of you will have heard my cotton trading story, where I was watching cotton for about a week, and every day cotton would go higher, and it would go higher, and it would go higher, and I thought to myself, it can't possibly go higher. And I said to myself, if cotton makes a new high today, I am going to buy it. Sure enough, cotton made a new high, and I bought it at the high, and it turned on its heels and fell like a rock. And that happened to be April 1st, April Fool's Day, which is why I remember it so well, because I was certainly the fool that day. Thank goodness I came early in my in my career, and it woke me up that I had to learn how to trade, right? That this was not a seat of the pants type of business. Let me show you guys something here. If I shoot a trend line across the highs, it would be much better to sell from up here than to sell down here. And once again, that's not to say the market will not go lower from here. The market's going to do what the market will do. But I would be more comfortable selling in this area. So once again, because we're in this bottom end of this trading range, that's why I'm trying to run a deeper stop. Okay, now that it's starting to head lower, my break-even trigger would probably be somewhere near the low of this bar. But even so, I would probably, well, maybe start considering bringing in my stop a little bit. The idea is that the sellers have control of the market at the moment. If they fail at this point right here, where we were looking initially 45.60, 45.58 region, then they probably no longer have control of the market, and I may as well leave early. Like John says, stop your stinking thinking. What did they say? When you rationalize, you tell yourself rational lies. I do think we're going to see the NQ rally a little bit more today. It's just, the market is so darn strong that any move to the downside, I think you need to be a little bit more aggressive on. Oh, and speaking of aggressive, how's our Raptor trade doing? Let's go with parabolics. There we go. That's all I'm going to give them. So if the sellers can't turn it around from here and keep pressing the market lower, then I may as well take my profit and get out. But I hope you can see how this was a higher probability signal, right? I didn't have to chase the market around. I didn't have to worry about taking every single signal. I can just sit back. I can wait for the market to tee up. Give me the signal I want. And then if I get it, it's kind of like being, a baseball batter. Or for those of you in the cricket world, if you're playing cricket, right, you want to wait for your pitch. You're not going to swing at everything. And you know that the pitchers, a lot of time, that first pitch that they throw is to see whether you're going to be a sucker, if you're going to swing at everything. And it's kind of fun sometimes watching the National League where the pitchers actually have to go to bat. They're always easy outs, right? Because they'll swing at everything. Whereas your good hitters, they pick their pitches, and the ones they don't like, well, they'll just foul off, and they'll keep fouling that ball off until the pitcher gets tired, and he either has to throw a grapefruit up there, which they lambaste, or he's really got to, knuckle in and get that ball over the plate. All right, so there was a decent trade there, even though we missed the opportunity out of the gate. Had a decent second chance there. And we're able to finish the day with a nice number, not bad, on 2 contracts. So again, trading becomes a numbers game, right? When you're able to pick the high probability signal, when you're able to wait for your pitch, and you get the signal, that's when you load up. If your account allows you 2 contracts, great, you take 2. If you're, get yourself to the point where you're trading other people's money, and there's lots of opportunities out there now thanks to the internet. If you are a half-decent trader, people will fund you to trade money. And so you're trading, say, a $100,000 account, all of a sudden you're taking 20 contracts, but the principle remains exactly the same. Okay, so here we are now with the macro pullback. All right, class, what do we think? Do we want to take this macro pullback? You better type quick. Just give me a yes or a no. Nobody? Nobody's even going to try? Okay, Michael. Way to go, Michael. Michael says no. Anybody else? Mark says yes. John says yes. Okay, a few yeses, a few nos. All right. Well, here's the way I'm looking at it. It's a macro pullback. We've broken down, we've retested. There's a chance that the market might try to head lower. So here, we'll hold it here. So if I enter, I'm going to enter, just below the hash mark. The thing is, where do I want to cover this trade, right? I would probably look, well, can I cover it way back here above the swing high? That would be ideal. This would give me the maximum staying power. Next, I would probably cover it here to the macro line. That gives me a reasonable amount of staying power and still puts me above these levels where the market may try to retreat to retest. Now, the macro pullback is one of our higher probability signals. So it is a signal I would consider taking, especially since we haven't really seen a test of the extreme here, have we? We haven't seen the market come down, fail, and head higher yet. So currently the sellers are still in control of this market. Okay, so the signal prints didn't fill us just yet. And here we are taking a little bit of heat, nothing too terribly serious, still in this retest mode. Still expecting the market to test the extreme. Yeah, John says looks like a triple top forming. It could be. This line right here is the really important one, right? That's the one where the sellers took over from the buyers. So now it's going to be, well, can the sellers hold the line? Now they're trying. We're getting a green bar sell. And remember, the green bar sell, not the strongest signal, but once again, we haven't had a test of the extreme. So here we're getting another opportunity. So there's a green bar sell. I could cover the trade up here. And again, if the dollar amounts, if your gut is telling you, I don't know, the signal doesn't look so strong, dial down the risk amount. We know the green bar sell, not the highest probability signal, but I'm looking here for a possible test of the extreme. My low is way down here. I've got a fair amount of room for this market to move. I'm retesting the support that's here. This should now be acting as resistance. It should now be trying to get some selling support to it. Oh, did I submit the order? Yes, I did. Okay. Come on down. All right. Oh, I was just about to adjust that order, but whatever. Here we go. Okay, so we just hit our break-even trigger. Again, working this test of the extreme idea. We'll see now whether the sellers are actually in control or whether the buyers are going to take it away from them. Come on, sellers. Show me what you got. There we go. Kai's asking, why should people buy below the price when they know the sellers are waiting up above? Well, not everybody sees things the way we do, right? Trading is, especially futures trading, is a zero-sum game. For every person who thinks the market's going to go lower, there's one who thinks the market's going to go higher. And not everybody has the same objective. We're in here, we're looking to scalp, $50 per contract, which is a heartbeat in a market like the Nasdaq. Other traders may be having a much longer perspective. They might be trading their retirement fund and putting their fund manager may be buying some Nasdaq stock as part of their 401k or RSP or whatever it is they're doing. So people have different reasons for getting in and for getting out, for that matter. All right, things are moving nicely in our favor. We're getting a little bit closer to the extreme. So in case the market bounces now, I want to protect a little bit more profit. In fact, maybe I'll go with the bar high-low. There we go. That's a little bit more aggressive stop strategy. If the market reverses on us now, then it will take me out at the first sign of weakness. Yeah, John says, and thankfully some traders are donors to our accounts. Absolutely. I used to tell some people when I was being a little bit more of a smart aleck that they could save themselves a lot of time by just writing me a check directly. Don't bother losing it little by little in the market. Death by 1,000 paper cuts, so to speak. Come on, get down there. They're working that first micro macro cross, and look at where the signal's starting to develop, right on the lows, right? And that would make sense because this is where the buyers are. We know the buyers are digging in here. If that first micro macro cross signal develops, we should see some buyers have to vacate their trades. And I think we're actually near the low of the day here, or the morning at 45.50. I do believe that's where the market started its rally out of the open. Come on. Come on. Get down there. You can do it. Come on. Somebody dip your toe below 45.50. I dare you. I double dog dare you. All right, there's the first micro macro cross. Let's see if somebody will take 49 3/4. If we see 45 49 3/4 trip, I think we're going to get some downward momentum here. I think the sellers might light them up. Come on. Let's go. Yeah, thanks, Joe. Joe says he's going to throw a big order in there. There you go. Thanks, Joe. Way to go. You're a bud. All the buyers not falling off quite as quickly as I thought they might. I'm going to get a little tighter on my stop yet. There we go. The buying did not evaporate, so I might as well take my profit. How'd that one work out? Oh, not bad. So we're able to squeak a couple extra dollars out of that trade. Again, a higher probability opportunity. Based on the retest, based on the fact that we haven't seen a test of the extreme yet. These are all things that are stacking the market in our favor. Yeah, Joe says, you see, that always works when I throw my big order in there. Okay, Kai is asking, wouldn't it be recommended to see the support and resistance as neutral zones where we enter just above or below? And the zone is a range of bars where the bulls and bears are obviously trying to fight each other? Well, yes and no. Yeah, sure, we'll do it here on the hawk. Okay, the problem with pure breakout trading, a friend of mine always used to say, never trust a breakout, is you have your zones like this. The problem with not taking this macro pullback signal and instead, say, buying a breakout higher is that the breakout may fail. This is why I tell you, well, like he used to say, never trust a breakout. What you want is you want that retest. Show me that the buyers have control, then I'll buy. And vice versa on the downtrend. Right? Let the market break, show me you have control, and then I'll sell. So here on this particular breakout, if the buyers had started to post bars like this, and we would get another buy signal through here somewhere, then you could buy. Then you could say, yeah, okay, the buyers have control, I'll buy the market. But instead what happened is the market traded lower. Now we're at the bottom end. And what happens if you trade a breakout here? Excuse me. Well, you're brought in. Excuse me. Sorry, had a little frog in my throat. Oh, I still do. Now we have the market bring us into the bottom side, and what happens? Oh, all of a sudden the market starts to retreat and go the other way. So it's to your advantage to identify the areas of support and resistance, but you don't necessarily want to simply trade the breakout. You can watch for the retest, which is what we ended up doing here, where the market came down, and then came up. And look, we retested. At the time we took the signal, it was still a green bar sell. And then we had the nice follow through lower. All right, so this is what made this a high probability signal, is we had this little retest phase, right? We had this section right here. And our patience was rewarded versus simply taking the breakout and then watching the market fail. Now, if you're watching something like volume, for instance, that gives you a little bit of a clue also whether the breakout will take. Whereas if you saw this breakout occur and volume increase, well, then that tells you that there's a lot of market participation selling. And likewise, over here, obviously, when the prices broke above here, and there would be breakout buyers, no question, but there wasn't a lot of participation on the buy side, and all of a sudden you get that kind of thing going on. And now we're back into yellow bars, and the market's going sideways. Okay, you guys got some great questions here. Just bear with me for a moment. Josh is asking, is the horizontal line based on previous high for long and previous low for a sell? So I think what you're referring to is, why did I draw a line through here? Well, this was the obvious support. How do I know it was obvious support? Well, because the market traded away from there. So I know this is where the buyers decided to come in. Likewise, I know that this is where the sellers decided to come in, way up here. So if the market now trades through this obvious area of support, and always go for the obvious, don't micromanage. I get people saying, oh, well, the market, it ticked higher here, so now support is here. Well, yes, technically you are correct. And they'll say, oh, well, the market ticked lower, so now resistance is here. Again, technically you are correct. However, which do you think is the stronger? Do you think this is the stronger resistance? Or do you think this is the stronger resistance? Well, we had this great big trend get stopped at 45.73. We had this little itty bitty trend to the upside get stopped at 45.68-ish. Well, I would say that 45.73 is stronger because this is the one that was stepping in front of a train, and this one is stepping in front of a tricycle. Likewise, the move lower, which support tends to be stronger? Well, we had, the market flinch in this 45.60 area here. It doubled up, actually got down to 45.56, more or less, kind of just eyeballing this price right here. By the way, this 45.60 and 45.56 are a reaction to the same price zone. So we have all this support around this 45.56, 45.60 region, and then we have a little itty bitty support here at 45.60 or 62, pardon me. Well, once again, this is this is the sellers really starting to press, right? The sellers stepped in front here at 45.73, really started to push hard. The buyers held them at 45.60. Sellers made an itty-bitty push, buyers made an itty-bitty push back. So always go for the obvious, and then when you get the breakout, once again, look for the obvious. Was this a retest? Well, you could have considered it a retest. I would have placed more weight on the fact that it was a first micro-macro cross than a retest. And then we have the macro pullback. Now we're getting the retest, the green bar sell. Well, at the time it was a green bar sell. And then we get the move lower. So who has control of the market now, do you think? Class, who do you think has control, the buyers or the sellers? I only get Josh. Okay, Josh and Micah. One's, all right, getting a few more people saying the buyers, a couple people saying sellers. I think it's the buyers also, because we've held the lows, and we've forced the market back above this swing high, which was our retest level, right? It was the retest level of this support. We're back above there. I would say the buyers have control of the market, at least for the time being. Now the sellers may squash them here. They may push them deep into this zone, in which case, you know, nobody has control, because then the buyers are likely to push here and the sellers will push here, and it will just kind of waffle back and forth for the rest of the day. But at this stage, the buyers have control. They've taken out this high right here. So what am I looking for now? Well, now I would be looking for a retest. I don't want the retest to go too deep and then come back with a buying opportunity. I think that first micro-macro cross still had a gray macro line to it. Yes, it did. So we technically don't have our first micro-macro cross signal yet. But notice this breakout and possible retest compared to this breakout and this retest. Like, this breakout went deep. Made a good retest, good move lower. Compare that to what's going on here, assuming it turns at this point here. We would have itty-bitty retest, and then we would be coming with, you know, probably equally itty-bitty move higher. It doesn't seem to have nearly the momentum with it as this one does it? Oh, Kai says, oh, I meant in a little smaller way. I thought the areas of range of where the weak sellers as a neutral zone, just for example. Okay, so I think I get what you're saying. So Kai is saying we've got weak sellers down here, the people who sold down here. They're obviously weak sellers because they're in trouble. And, you know, if the market turns here and we're going to have some weak buyers and we're going to end up in a sideways channel, yes, in that case, you definitely want to avoid it. Yeah, Josh is saying, so now we wait for the pullback and an opportunity to go long. Yes, that's the short answer. But again, we're looking for some momentum here. I do believe the market is still bullish today. So do we get trend change signals on the other tools? Yeah, here on the Eagle. We got our red bar buy off of the hard edge, right? So we had an opportunity to buy in the Eagle like that. It looks like we're almost halfway to our profit objective. But again, momentum seems to be waning a little bit. Here on the Falcon, I still have my channel drawn. You can see we started to shallow out a little bit, suggesting we were losing some downward momentum. Falcon did not produce a signal, however. John's asking, what are my criteria for using the support and resistance suite? And do I think that it lends itself better to one bird or the other? First, I'll answer the bird question because it's easier. No, it works on any of the birds. I only put it on the Falcon so that my charts don't get too cluttered for you. It's more for your sakes so that you can actually see what I'm doing here. That I only have one tool per bird. So I've got the Geiger counter down here, support and resistance suite, day ranger, trend forecaster. But you could put all of these on one chart if you didn't find it too cumbersome. How do I use them? Well, I love to use them as a way to confirm a signal. So, if we were looking at a trend change signal here, and this would be an early trend change signal to the upside, the fact that we were bouncing off of the secondary resistance line would give me a little bit more confidence to buy that. Now, I wouldn't buy it right on the hash mark, not with the little bit of swing high that close, and I would use this area also in consideration for my stops. So you can see that one actually turned and then reversed, and once again, rather than enter right on the hash mark, I would probably enter below the resistance line. I also use them, Omar loved to use them as profit objectives. So if he was, oh, here's a nice example of a bounce. Let's look at this one here. So here's a nice example of how the support and resistance line actually supported the signal. So that's a nice example. Now Omar would actually use these lines as profit objectives also. So he would set his up like this. He would go in here, out here, and he would take profit there. That's how he liked to do it. And you can see it worked out pretty well. Hit the resistance area and then flinched a little bit. But a lot of times I'll use them, I can spot, even when I'm looking here at the hawk, I can look down at my eagle and see where my band is. I can check my Geiger counter. I can see that we're here at a resistance zone at 45.61. So I'd love to see this close above 45.61, which means that bar has to close at 45.62. So here's my signal on the hawk, first micro macro cross. Maybe I'll put in the buy at 45.62. Cover it here to the swing in the macro line, just in case there's a little bit more of a pullback. And this is now our retest of the breakout here. Yeah, definitely the momentum off from what it was earlier. Okay, I think I got everybody's question, but if I didn't, please repost it or let me know that you posted a question. Yeah, the NQ kind of just meandering a little bit. Soybeans. Great move in soybeans this morning. So the market opened right here with a trend change signal and a late filter entry. And look at that follow through. Beautiful. A nice bounce off of the primary resistance. Came up, produced a signal, hit the first zone, came back, hit the second zone. That was a good trade. Crude oil starting to go a little bit sideways after that rally that we were watching. Oh, I should have shown you on the Eagle, but here's essentially the same thing on the Falcon. Came in with our trend change signal right here. Again, just above the primary resistance. So you can see we kind of made a little bit of a retreat from the primary support, traded right through the median line, hit the primary resistance, flinched, came back, produced a signal above, and we went our two zones, which is what we normally anticipate. So zone number 1, zone number 2. See, there's nothing to it. John's asking, when do I consider the open tick of the day? Midnight or 9:30 Eastern? 9:30 Eastern is the time I consider the open. Now, if you're in Europe or in another part of the world outside of North America, there's always markets that are native to your time zone, right? So if you're following the London session, you'll want to focus a little bit more on markets that are native to your time zone, like the British pound, like the euro, maybe Brent crude instead of Sweet Texas. But there's a whole host of markets. Gold is a good 24-hour market. I don't follow gold as much as I used to, but gold is a very good 24-hour market. If you're in the Asian time zone, once again, you've got like Aussie dollar, you've got the Japanese and Chinese stock exchanges. Yeah, there's lots. There's the Japanese yen is always a good currency to follow. So there's always opportunities wherever you happen to be living. All right, you guys, I think we're going to button things up for today. A pretty good Monday morning so far. If you are trading this afternoon, it does seem as though the buyers do have the advantage today. So you may want to stay or look for buying opportunities. Kai and everybody else, anybody who wants the cheat sheet, who, if you don't have it yet, you can email me at eric@supportandresistance.com, and there's my email. All right, and I will see you guys again tomorrow, and hopefully we'll have another good day. All right, you guys, we'll talk to you later. Bye for now.